Welcome to the Stockout, the first show back after F3, our great conference in Chattanooga, which we both attended, last week. Today we have a great show. We're going to talk about the SONAR enhancements that we debuted for the first time last week at the conference. We're going to talk about Target's earnings. We'll talk about the Freight Tech Awards, and you'll go through the Freight Tech Awards. And if you have any other times, it's takeaways for other takeaways from F3. Always just a ton of content. But yeah, it was great to see you at the conference last week.
Yeah, it was a good time. I talked with a number of attendees, especially at the airport afterwards as well, and a lot of really great feedback, which was great to hear too. And I think just being where we are at post election, this market swing, it was just a really interesting, I think, experience and overall discussions too. So we'll have time, we'll get into it, but I think even touching on some of the things today in today's episode, we'll get into that as well.
Yeah, lots of optimism out there for sure. I think that was definitely a theme of the conference. And before we get into all that, I want to thank our sponsor, which is Nikola. Discover the future of freight transportation today. Visit Nikola's website to explore their zero-emission Class 8 trucks. Transform your fleet and lead the charge in sustainable logistics. Learn more at nicolamotor.com. Production tells me it's Nicola, not Nicola, which sometimes I've mispronounced it. But also, that's first announcement. Next announcement is want to make sure everyone knows how to sign up for the Stockout newsletter. So you can do that by going to www.freightwaves.com/the Stockout, or just go to the site up at the top under newsletters. First one under supply chains, the Stockout, CPG and retail. That'll be in your inbox every Wednesday afternoon at 2 o'clock Eastern time. So with that out of the way, I want to walk through some of the new SONAR content, some of the new SONAR announcements. And really the first couple things here are ways to enhance the user experience. And the first thing is a national truckload insights page. So that's going to be available when you log into SONAR. This is currently in QA, going to be pushed to the site very shortly. Up at the top, you go to this insights page, and you get two options. You get the first option: do you want data that's on a national level, which is what we're looking at here, or do you want it on a regional level? So right here in one page, it gives you some insights into what the data is telling us. So if you're new to it and you say, okay, the tender rejection rate is a 6%, kind of what does that mean? Under actionable insights, it means generally balanced freight conditions, change in neutral change in rejections, and it's sort of a little bit flat near term. It gives you some thoughts on what's happening in the marketplace today. It gives you the van rate per mile, sort of where that range has been over the last 52 weeks. $2.32 a mile, still a little bit shaded towards the low end of the range. And then you get spot rate changes over the last 4 days. So this is the type of thing that's going to be helpful for brokers that care about these individual locations, and also shippers that want to know what's happening in their market. You also get a little bit on fuel there, a little bit on capacity, a little bit on demand. So it's kind of in a one-page tear sheet. If all you have time for is to not type in a lot of codes and go to one page, this is going to be your one page. And then you can go to your top markets and have a regional insights page, which is what we're looking at here. So all I did was go to up at the top, key market insights, and all I typed in was Chicago. There wasn't any code involved. It need to know how to use SONAR, just needed to know how to spell Chicago. And here you get the insights right away that the tender rejection rate there is 7.45%. That exceeds the national rate, that's 6% I mentioned earlier. You see the volume's a little bit more than it has been on average the last 52 weeks. Maybe that's a little bit why it's a little bit harder to find a truck. And you're seeing a lot of inbound volume, more inbound volume than outbound volume. So that's a sort of a key takeaway, there as well. So and then some moderate, loosening in that market, even though the market is moderately tight, at least relative to the national level. So it gives you some really quick insights without having to be a SONAR expert. So I think that's going to be a big enhancement for shippers. And then those two screens were with our existing data, and now in addition to that, we're rolling out new data, in particular new LTL data and new intermodal data. So what we're going to look at first here is the LTL data. We have 20 new tickers for LTL data, and it's going to be segmented by freight class and also length of haul. So this blue line is LTL class 70 to 85. That's also categorized as a long length of haul. The red line is long length of haul as well, but it's categorized as freight class 50 to 65, and that has a lower rate. The higher numbers for the classifications tend to have higher rates, and that is a function of density. So the high freight classes are the less dense freight, something like, on extreme end, ping pong balls or feathers. Low freight classes would be more dense freight that would be at the bottom of the truck. And so this would just give you a sense of kind of what it would cost to ship what I'm shipping. And I think this would enhance shippers' ability to know, you'll be able to price and help with the RFP, programs. And then also, financial analysts, I think, are going to find a lot of value of this too. Some of the publicly traded LTL carriers, they report revenue per hundredweight, which, as our head of market intelligence, Zach Strickland, describes, is kind of the worst way to look at LTL pricing, because it fails to account for changes in freight mix and the associated impact that those have on freight pricing. And Grace, do you have anything to add to this? Do you have any experience brokering LTL freight?
Yeah, and it's an experience. I'll say that, especially, if you're not a large broker, you don't have a lot of volume, you're likely using a LTL broker as well. And the transparency just isn't there in pricing like you're seeing here. I think what's great about this is you actually now have a way to see overall how the market is performing, to not only see that in current state, but also see trends over time as well. It's kind of, I mean, it's for a lot of more medium-sized brokerages, smaller brokerages, it's really kind of like an Expedia experience. So you're just like putting in class numbers, zip codes, etc., and seeing what comes back. But to be able to see trends over time and to actually, evaluate what your customer is paying toward against the market, and even what your company is paying as well, I think is huge too. So yeah, it's a set of data I think is difficult for many brokers to get their hands on, and one that, even if they were to just run their own statistics, might not have that density of data in order to make that work too. So love that. I also love the insights pages. I think, every morning I personally actually start off by like looking at the Sonar updates that we have on the website, right? It reminds me of just like that, just something that you can start your day off of, see where the market's performing, see where your top markets are performing, and attack the day appropriately. Love a good user interface as well. And I think that's checking the box for a lot of users too.
Yeah, for that LTL data, if I was a stock analyst or someone trading Old Dominion or Saya, I'd want to look at that
Yeah.
every week to see how that's trending, because I think that gives you an insight that not everyone who participates in the stock market or trading those stocks is going to have. I also want to talk about our intermodal data. We rolled out intermodal rates by lane, and so these are three examples of intermodal contract rates by lane. We already had intermodal spot rates by lane on 100 lanes. So we're rolling out contract rates, leveraging our relationship with Cass. So the blue line there is LA to Chicago. See that at $1.43. Some of these lanes that are outbound from LA that are not quite as dense as that. LA to Atlanta, they're at $1.85. In yellow, LA to Dallas, $2.07. And you see how they've kind of trended over the past few years. And I think the question is, are the intermodal contract rates going to rise from here, and how sharply? This data is going to come out every week, give us some insight there. And because it's broken down by lane, it makes it a lot more relevant to shippers in the CPG and retail spaces, and also makes it, I think, more relevant for stock analysts. I mean, that these are domestic intermodal rates, so the rates to move 53-foot containers, including fuel, and that like JB Hunt's really densest lane is LA to Chicago on the BNSF, and so you're really going to want to pay attention if you're in that position to that blue line, and see where that trends. It's going to influence your earnings model, and gives you some insight as to whether they're going to beat earnings in the next quarter or not. So we have that in 67 lanes. Those are going to be some of the densest lanes in the country. And then we also have it in two indexes, which is the next Sonar chart here, which is those two indexes are intermodal head haul lanes leaving Los Angeles. So that's going to be an aggregation of 5 lanes. That's going to be in the blue line. So that's going to be an average of LA to Chicago, LA to Dallas, LA to Atlanta, LA to Newark. I think there's one other LA to Harrisburg. And then the red line is an aggregation of 9 what they call local east lanes, which would be in the eastern 1/3 of the country. Chicago to Newark would be an example. Chicago to Atlanta would be another example. So those are an aggregation of 9 rates, and those are higher on average, and also just much more influenced by the truckload market, because those lanes are just much more competitive with the truckload market. Are going to be more influenced by volatility in the truckload market, and that's why you see kind of on a percent basis that red line has fallen further from its high in 2022, because it's just more influenced by the truckload market than the long haul intermodal, which the long haul intermodal is just more protected against the truckload market, because you can distribute that fuel savings over larger number of miles. So encourage people to go in there and check those out. And would also mention that, we have 67 intermodal rates, also have 67 savings rates versus truckload, just by way of having all of the contract rates for all the truckload lanes available in market dashboard. So it's really easy to compare across mode to see which mode you should use.
That's the one thing I was going to say. I mean, that's another topic that came up actually during the event as well, is just the multimodal approach, right, to providing logistics services. And I think that's going to become true for players of any size, right? Shippers aren't going to want to hear from you unless you have the capabilities to not only offer that, but be able to analyze all of the different modes and figure out what would be best for them in certain circumstances as well. So we talk about like what the future of brokerage will look like, and I think it'll be more and more of those type of discussions, less of kind of like the slanging freight aspect, right? Like, give me a load today, I'll and another one tomorrow, but more of these deeper discussions on how shippers can take advantage of these modes too. So I love this. I think this is ahead of the times for a lot of what logistics providers are quite literally providing out there. So it's exciting to see this all under one roof here at Sonar.
Yeah, so I would encourage everyone to reach out to their Sonar customer success person if they're an existing Sonar customer, or to learn more, go to gosonar.com or gosonar.com. The next topic is Target. Target seems like it can't catch a break. Last week, shares, when they reported earnings, down 20%. Last 5 days, they're down 17.8%. You see those orange dots. That's when a lot of analysts changed earnings. A lot, I think, cut the cut their target prices, or certainly cut the target prices, but also change their ratings. And a lot of times after the poor earnings. The next chart, if you really wanted to stick the knife in and twist it, shows how Target has performed relative to Walmart over a 2-year basis. Walmart, you're up 77%. Target, you're down 23%. So for two companies that are considered peers, really a wide range of how they're performing. So what happened last week? So Target reported same-store sales increased only 0.3%. That was worse than people expected. It does break down to a 1.9% decline in same-store sales in the store and a 10.8% increase online, and that 0.3%, a lot worse than the peer group. When you look at Walmart, was up 5.3%. Costco in the last week, they do it kind of a monthly basis also, but it was up 5.8% when you exclude gasoline. And then costs continue to be an issue for Target. Operating margin of 4.6% compared to 5.2% a year ago, and that 5.2% was a lot worse than what it had been historically, which was more like 8, 9, 10%. So they talked about the extra costs associated with changes to supply chains in light of the ILA strike, which is having an impact. But really, kind of the question going forward, and I listened to one stock analyst talk about this on one of the one of the news outlets, was that the multiples both on price earnings and enterprise value EBITDA are about half of what Walmart is trading on, and this analyst didn't think that discount was sort of fully. That discount was maybe overdone because Target is now being lumped in terms of valuation in with companies that are like the department stores, which was maybe too big of a penalty. And clearly, I mean, Walmart's in a better position for things like food. Less of their business mix is discretionary. Maybe they're a little bit more sophisticated on the supply chain side. And I think they've maybe upgraded the layout of the stores. And I think Target is more susceptible to losing market share to Amazon just because the demographics just really overlap kind of almost entirely. But what do you think about that? Does Target deserve a multiple of earnings that's half of what Walmart is?
Well, I will say, walking into Target recently, I'm surprised all the Wicked stuff didn't save them. I guess that would be on this upcoming quarter, right? We'll see if it did. But looking at the two, I mean, I think there's a number of reasons to make this argument. One, a big part of it, I think, is just revenue streams, right? So, like Walmart, if you look at more of like international markets that they're in, some of those investments in Flipkart, et cetera, and then also on the advertisement side of everything as well, I think. Walmart, of course, has a little bit more going for them in those areas, whereas Target's is more focused on the discretionary spending in particular. Also, I think just e-commerce in general. I think Walmart, I guess, I grew 22% in the last quarter, which a big part of that too for Walmart was the online grocery and fulfillment aspect, and I think really since COVID, we've talked about throughout a numerous amount of shows, just Target's issues with kind of keeping up or not. Experimenting with different fulfillment systems is probably the best way to explain that. So I think that's another win for Walmart there too. And then just overall, I think just confidence in Walmart has helped it perform as well. And Target clearly it has a couple of issues. I think even there's a number of articles and touches on clearly the decision makers behind, especially right, a lot of the ILA strike push and freight too, and what they're looking at and why those decisions were made in particular. So I think there's a couple of things going for it for the stock in particular, but just overall, I think especially Walmart, you look at the more broad approach and also what they're doing with customer data on the advertisement side of things too. Also, I mean, Walmart Plus, I think, is a much better offering than any Target Circle offering too. Been in the stores lately, haven't seen any crazy deals, and honestly, especially like in the clothing aspect of things, I feel like Walmart's push has almost lost strength in that in particular as a consumer over the last year or so. So, not to say that it's double that, but it's definitely there's a lot to argue for Walmart in that valuation.
Yeah, for sure. And I thought it was interesting that on their earnings call, they kept talking about how the consumer, they had been talking about how the consumer was resilient, and now they're talking about the consumer is really more resourceful, looking for
Yes.
deals and just being more discretionary. I think, but
Yeah.
yeah, I think it reflects that people are just looking for value right now. I mean, really, kind of across the income spectrum. It seems like
Yeah.
right now.
And I've read a number of reports too in the holiday spending about a lot of that's going to be going towards maybe things that the household actually truly does need, but given as a gift kind of situation, if that makes sense. I think that's not helping Target either. And Walmart's got a lot of great deals in those areas too. So we'll see what 21 days, right, in that short period this year, something along those lines between the 2 days, and crazy Black Friday's right around the corner. So we'll see. Next week we can have a fun discussion on that too.
Yeah, we'll see what people have to say about Black Friday. I know stock analysts will go to the stores on Black Friday and try to assess, what's happening in the store. People are really excited about certain stores, but it's like you can't be everywhere, and it's like it's just kind of an anecdote. But they still try to do it and take all the pictures and things. So with that,
Yeah.
why don't we talk about the Freight Tech Top 25 Awards?
Yeah, it's really exciting being able to be on stage with Kaylee and review these. And what's great about our awards is In particular, I think they do a really good job of reviewing the past year and what's been big on companies' minds and what hasn't. I mean, to go through it in particular, there's a number of areas I want to call out. We talked about actually LTL, right, just now, and I think that service in particular showcased itself. My carrier was back on the list, and we know that the great partnerships that they're putting together with LTL carriers and making of course, LTL booking process a lot more user friendly. Not only that, but the insurance side of LTL working with LoSure, and they actually acquired payment service recently too. So see a lot of positive aspects from the LTL market. One in particular that's interesting made the number 10 spot, so top 10 in general is Cargado, which, if you don't know, of course, is helping with cross border trade in particular. Matt Silver, of course, is behind that company. What I think is really interesting about that, though, is the fact that to even look back in the past year, have not been around for, I want to say, maybe around 6 months at this point. But they're all already taking off and getting a lot of traction. And I think again, this top 10 list showcases just overall logistics problems this past year, or even more so what we're anticipating for the near future. So happy to see Cargado on there, and I think just showcasing the need for better cross-border services and just technology in general. And I think that's something even that the Mexico government is working on when it comes to cross-border trade and documentation. So I think it's just a perfect timing for Cargado, and I'm really excited to see where they are in the future there too. Another big one on there was a highway, number one spot. Again, newer company. To hit number one, I think is huge, but freight fraud, retail fraud in this space we talked about too on this show. Fraud in particular is becoming a huge issue. I just did so talking about newsletters, we have Fraud Watch now that's coming out on Thursdays as well at 3:30. You guys can go and sign up for that as well on our FreightWaves page. But even this past week, right? I think Guy Fieri had his that or tequila brand come out, and he lost a full trailer due to double brokering. I mean, no one is safe at this point. So if Guy Fieri is dealing with this on his end, then I'm sure we're seeing the shippers that we talk about on this show really watching not only the carriers that they're using, but really, I think, holding their logistics providers to a standard to make sure that they are also looking to add positive carriers. And I talked to Michael Caney at the show, and we had a really interesting chat just around the fraud conversation as a whole. And his outlook with Highway, I think, is interesting in regards to making this almost less of like a fraud story and more of a confidence that your systems are checking on the background, almost as if you can make fraud at some point a second thought in your mind, where I think it's the first thought in a lot of people's minds right now in particular, especially for those who are taking losses from some of those mistakes where you've made, maybe chosen the wrong carrier or seen insurance claims not coming out in your favor. I mean, a lot of that stuff, especially for brokerages going into the market now that we're seeing the dollar wrong mistake or seeing those dollars go out for those mistakes is going to be huge, right? We're going into this period. I'm very interested in seeing how brokerages maneuver around their finances, something we talked about, Marquee Insurance and a few others, Triumph Pay and Load Pay as well. The fact that, right, like we're going to start to see brokers trying to compete again with capacity, which means they're going to have to watch their payment terms. They're going to have to make sure that they're staying on top of that, but also choosing the right carriers behind that too. And I think making sure that you're not taking an extra burden or loss because of the carrier you chose is going to be big in this 2025 year. So go check out that top 25 list. There's a lot of really interesting players on there. But what's, I think, my favorite thing is just it's a perfect view of the issues we saw this past year, where we're starting to change. Oh, Good Ship, another one on there. Talk about shippers, helping them with procurement. I think shippers, right, are starting to look at their procurement process and really figure out the capacity needs that they'll need going into the next year, right, already in this different market as well. So, yeah, good time on stage. Good time, of course, congratulating all of these individuals and Of course, happy to see what 2025 will bring in regards to the work that these players have done as well.
And how do we determine those awards? Do the journalists like you
Yeah.
vote on it, or how do we do it?
So we do here at FreightWaves, we dwindle it down. You nominate yourself through the nomination process. We dwindle that down to 100 people. Then we send that off to a research group. I believe HHM is the company. They reach out to experts within the industry, leaders as well. They vote. And I will say, did see the vote numbers behind it, and Highway just totally killed the competition on this one. Between the 25 spot and the number one spot, there was hundreds of votes difference. So I think, again, shows you why that freight fraud aspect is so important as well. Love it.
Yeah, good for Highway.
Well, hey,
Check out that
yeah.
that video when it goes up.
Yeah, excited for that. Of course, you should see a lot of our videos on our YouTube page soon for the event. So if you missed anything or weren't able to make it to the show, go to our YouTube page. There's going to be tons of content for you over the holidays. Of course, as you're sitting around Thanksgiving, maybe you want a freight video. Who doesn't? Between the lions destroying the bears, who doesn't want that? So that's all for the time it looks like we have this week for everyone. Enjoy the holiday. We'll be here, of course, after good old Black Friday weekend to chat about that as well. Make sure you join our newsletter on freightwaves.com, and we'll chat with you all next week.